the more stocks that have buy signals, the more stocks will push up the market. But when the market moves like this, while the breadth is coming down, that leaves you vulnerable. That leaves you like the exposed general. That leaves the market in a weak upward trend. Good afternoon, traders. As you can see, I got my stuff together. I'm pretty happy about that. Yeah. So yesterday afternoon, after the trading room, I went and shut my computer down, start shut down, and did some stuff, came back, and it was dead, like dead as a doornail, like nothing was happening. And I had just replaced the PSU yesterday morning, the power supply in it. And so I'm like, what is happening? Did the power supply die? And there's this little trick you can do with a paper clip to test if it's working, and it was still working. And I'm like, why is it dead? I don't understand. So I spent like 2 hours like digging through the thing, trying to figure out what's going on. Eventually I gave up. I was thinking like maybe it was the motherboard or something. So I took it over to a tech professional, I guess you could say. And I explained to him, and he's like, sometimes motherboards go bad after you replace a power supply or something like that. And he's like, I'll take a look at it. So I text him this morning. I'm like, hey, what's the status? And he's like, everything's working. It's been working ever since you dropped it off. And I'm like, come on. It's one of those things, right? You take your car to the dealership because it's not working right. And as soon as it gets there, everything just works right. That's exactly the situation I'm in. So for now, everything's working great. But we had an internal meeting this morning at OVTLYR, and I do want to share a couple things from the meeting with you real quick. First, Mahesh is working on some active patches right now in the scanner. There is you can't see my screen. There is some sort of bug going on with the screener. It's not pulling in everything that we want to see. He said it should be ready by tomorrow. Like whatever the bug is going on with this, it should be resolved by tomorrow. So of course, got to work with that a little bit. But one thing that I did want to share, and one thing that you're going to see me talk about in my slide deck is the pricing on OVTLYR, right? We will be raising prices here at the end of September. So I want to make that aware, make you aware of that, because when you go to pricing, right now you can get a coupon. I mean, go annual. There's no reason to go monthly. You save so much money with annual. So the normal price of annual is $588, and we have a coupon that takes it down to $299 a year. That coupon goes away at the end of the month. So if you don't already have the annual, I would really recommend you get it because it absolutely will be going up. But like I say, I'm going to be mentioning this in the live streams. Mahesh will be doing live streams starting next week, starting next Monday. He's saying he's going to go live daily, which is really cool. So he'll be live 10 a.m. West Coast time. He's out in California. So that'll be noon o'clock Central time or 1 o'clock Eastern time. You'll be able to see Mahesh. He's going to basically talk about news, the way he looks at trades. He and I look at trades differently, but he said watching my trading, he's like, Chris, I've learned a lot. I've learned a lot of things that I hadn't planned on learning from your style of trading. One of them is about the rule, the get out of the market rule, right? When the SPY closes under the 20-period moving average, to just bail, right? Wait until things settle down. Now, if everything had lined up, I would actually be looking for long trades today, but we're not to that point yet. We'll cover that in a little bit. So I'm excited to see that Mahesh will be going live starting next week. So you guys will have an opportunity to hear from Mahesh, hear how he trades, and maybe it fits your trading style as well. But Mark had this really great idea. He watches the live streams, and he's like, Chris, you said something last week that really struck to me. He's like, it's kind of like reverse Fight Club or opposite Fight Club, maybe reverse Fight Club. And he's like, you were telling people to make sure that they bring a friend. And so we're going to do some stuff around that. Basically, first rule of OVTLYR is you tell everyone about OVTLYR. And you get paid to do so, right? Because we have the affiliate program and we want you to take advantage of that. But let's see who's here. Dave is here. Wes is here. Good afternoon to everybody. Michael's here. He has made time for us. He's quit cracking necks and cashing checks just for like, a few minutes. Goran's here. Leo's here. Tug, good to see you, Tug. Donna, good afternoon. Goran says 10 EMA bounce back above the 20 EMA on the SPY. Yeah, we'll talk about that in a little bit. Michael is here. Cam, any word on interactive broker platform? I don't know anything about interactive brokers, unfortunately. Cam, I know you said that you had a friend that's interested in joining with OVTLYR, and we're really stoked about that. I can't tell the news. Mahesh is still signing papers, but something awesome's happening. I can't tell you more than that. I can't tell you more than that. Francis, this is way better than Fight Club. I'll tell you what, it makes you a lot more money than watching Fight Club, doesn't it? Okay, so let's jump into the rules real quick, and we'll go through this. And I think today is a good day where we can spend a little time talking about why we use moving averages we do. So let's jump right into our market analysis. All right, welcome to the OVTLYR Trading Room. This is smart trading made simple. Save time, make money, start winning with less risk. Now that is what I like to call profit hacking. And you can get a copy of the playbook over at profithackingplaybook.com or inside our VIP Investors Toolkit. Now, for those of you who don't know me, my name is Christopher Uhl. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with OVTLYR, and this is my style of trading using OVTLYR. I call it the golden ticket trading strategy. It's the 8 steps to turn profit hacking into pure gold. Hey, you know what? I got to thinking about this yesterday. I know you guys are all subscribed, but what I'd like you to do is start hitting the like button for me as we go through, because that shares this out to more people. And the more people we get to see, the more people we can help with OVTLYR, right? So I'm going to ask you on a daily basis as we get to this slide, hey, do me a favor, down below, hit that like button, and that'll help spread the word on these particular live streams. So with the golden ticket trading strategy, it's unlocked with the master key, with the SPY signal, the market breadth, and the sector breadth. Now let's talk about the SPY signal. We are still in a sell on the SPY. And we got that. Let's see when we got that. We got that on September 5th. We got a sell signal on the SPY. Okay. So I would only be looking for bearish trades at this point. The market breadth is very bearish, right? This is the percent of stocks on the bull list, the percent of stocks that have buy signals here. And as you can see, it's very cyclical, right? And right now it's trending downward. And when it's trending downward, like less and less stocks are getting buy signals and more stocks are getting sell signals. So from a macro perspective here, when the market is moving one direction or another, yet it doesn't have the breadth behind it, I would consider this a very weak trend, right? We've seen some very powerful moves down in the last couple of weeks. And in fact, this morning, it was a pretty powerful move down. This candle, top to bottom, is a 2.4% candle. That's a huge candle. That's a $13 move on the SPY. Now, market breadth being weak like this can absolutely have movements that you weren't necessarily expecting. In fact, let's break that down a little bit. The more people that are participating, the more liquid a stock is, the more liquid the market is. And you can think of the market's liquidity through market breadth, okay? More people buying, pushing up the buy signals, pushing up the market, okay? So they're connected, right? The market and the breadth, how should I phrase this? The way that I had heard it described to me is it's like the market number, the number of the market, right? The market average is like the general, right? And if the general is moving higher, if the general is moving one direction, yet all the soldiers, being the individual stocks that make up the market, if the general is moving one direction, if the general is moving north and all the soldiers are moving south, then the general is very weak. Then the general is left vulnerable. Then the general can retreat very quickly to where his soldiers are. That is a really decent analogy. I would highly recommend going back. In fact, I'm going to save this video and use this as like a market breadth explanation here, because the more stocks that have buy signals, the more stocks will push up the market. But when the market moves like this, while the breadth is coming down, that leaves you vulnerable. That leaves you like the exposed general. That leaves the market in a weak upward trend. Now, when they move together, when the breadth is going higher, meaning more and more stocks are getting the buy signals, that inherently pushes up the market, right? It's like filling up the bathtub. Okay. When more and more stocks have those buy signals and the market is pushing higher, it is a very strong trend moving in one direction. But when you have the dissection here, when breadth is going down while the market price may be up for today, it's a very weak trend. So I would be highly, highly cautious. Now, yesterday, we didn't take any short trades, even though I really wanted to, because it had closed above the 50 period moving average. And this morning, it was well below the 50, and it's popped right back up over the 10, over the 50, and over the 20. So this is really key here, right? This is a crucial level. If we can see, and in fact, we've got a an order block right above this, so I would actually see, I would expect some reversals. In fact, let's do Chris's prediction time. Let's say, I don't think it gets up to that order block fast. Let's say it takes, I could be totally wrong, by the way. Let's say it takes 2 more days to get up to where that order block is. And then the order block rejects it. And then it bounces around in this area for a little bit. And then back down. That's what I think is likely to happen. Doesn't mean that it will. It's just what I think is going to happen. Let's catch up in the chat here. Peter, good to see you. Cam says, it's all good. I thought it was going to be interactive broker platform that the deal was going to be done with. I'm looking forward to the big news. I will tell you, we're not making any deals with interactive brokers right now. That's all I can tell you. Peter is watching in VR. Dang. Oh, hang on, Peter. I'm going to mess with you at this point. Oh, Peter. Very cool, Peter. Question about sizing trades. How do we account for various option pricing? Different expiration dates have different prices. Yes, they do. We'll talk about that in a minute. Unless there's a mutiny. Unless there's a mutiny with the general and the soldiers. Sebastian made it. So yeah, that's what I want to cover today. You want to have the market breadth and the market trend being in price. Market trend, the market breadth moving together because they work together, right? When one is moving opposite of the other, it is a weak trend, either direction. And you don't want a weak trend, right? You don't ever want a weak trend. Who wants a weak trend? Who wants to buy a stock who is just in a weak trend? Right? That's like going to a car dealership and you've got 2 cars there. One is a Hyundai, one is a Lamborghini. And you are trying to get from point A to point B as fast as possible. They both cost the same. Which one are you going to pick? Clearly the Lamborghini, because you need to get from point A to point B as fast as possible. You want to grow your account as big as fast as possible, right? So why would you go with the weak car? No offense if you drive a Hyundai. Why would you go with the weak car with like a weak trend, weak breadth, when you could go with the fast car when the trend and the breadth are moving together? Does that make sense? Right? We want that strength behind us. So I won't be taking any trades today, unfortunately. I wanted to, but it didn't set up, right? And this is another reason why I trade at the end of the day. Right here. Well, it'd be that way. The screen's over there, but it's over there on your screen. This is a great reason why I trade at the end of the day. Because when all the liquidity came in, what happened? Price went up. So won't be taking any trades today, unfortunately. I feel like there was a question in the Discord. Let me review the Discord real quick. I because I dealing with my computer, I haven't been as on top of things as I have been. Hang on. Stole the wife's laptop. Yes, so the screener is going to be fixed by tomorrow. Mahesh is literally working on it right now. I think that may be it. Oh, there was a question about order blocks. So order blocks are super cool. In fact, there's a great one right there. Let me zoom out just a smidge, and you can see some order blocks down here. Order blocks are a great way to see. Peter says that was indeed scary. Order blocks are a great way to see support and resistance. I was never a believer in support and resistance. I thought it was one of those things that those Forex trading gurus made up. Um, but here's a great example. Here's a great example. Uh, this order block was created on April 30th, right? And then price went up, price went down. It kissed that order block within a couple pennies and rocketed up from there, right? That's not coincidental. We've seen it time after time after time. Here's a perfect example here. It went up, order block created in February, down, went right in that order block, and then went up after that point. Order blocks are powerful, but you don't have to have TrendSpider to get them. I don't know what other chart platforms have it, but I feel like a couple of people are saying TradingView, and they may not be specifically exactly the same, but this is my criteria. It doesn't even give me anything to choose from other than the number 50. Okay, there you go. You can change it to whatever number you want. I think the default, at least in TrendSpider, is 20 something, like 24 or 26. But working with this, seeing how it works, I saw that 50 seemed a lot more, um, 50 seemed a lot more realistic, advantageous, um, effective. That's the word. Seemed a lot more effective than 24. It's going to make minor differences, but either way, I thought that was pretty awesome. So wanted to share that with you. Brian says, I need a PC sponsorship. Dude, I would love a PC. Could you imagine what kind of baller ass PC if I had a PC sponsorship? Max says, I use TradingView and it looks very similar. It's close enough to TrendSpider. I agree. Got here late. Well, good to see you, Randy. Glad you made it anyway. Randy, the market has recovered. I ain't going short. I don't think you should either. Okay. I believe that was everything I wanted to cover today. We talked about the scanner or screener. We talked about market breadth and how important that is. I think we're good to go. Okay, let's wrap it there. As far as I know, my computer should work tomorrow, so there shouldn't be any issues. But if something does go crazy, I'll let you know otherwise in the Discord. But again, this market right now, it's going to chew up a lot of people. You don't have to be one of them. Follow the plan, follow the rules. The rules are proven to work year after year. And I would hate for you to go rogue and totally get botched. Oh, no. Tug had a question. I knew that there was something I was missing. Tug had a question on sizing trades. How do we account for various option pricing? Explain. Okay, give me a second, Tug. Let me log into Tastyworks over here. Talk amongst yourselves while I log in, please. All right. Let's load this in. We talked a couple days ago about the math behind position sizing and why ATR is so vital. I would highly recommend, if you haven't seen that one, go back a couple days because we really went into how you can trade Coke and you can trade Tesla at the exact same risk level in dollars to your account, even though one has 12 times as much ATR, and ATR meaning volatility. One has, I think it was 12 times as much volatility as the other. Tesla has 12 times as much volatility as Coke, yet you can equalize the amount of risk to your portfolio on every trade. So would highly recommend reviewing that video. But to Tug's question here, he's talking about position sizing on option pricing. Okay. So yeah, for sure. Let's drop the September 20th and October 20th. Good gravy. There's so many strikes on the SPY. Let's go to Coke. Coke is my default, like, boring stock. All right. So let's say that I want to buy an 80 Delta Coke on the uh, September 20th, 80 Delta, let's say that's the 70s. Okay. So that's, let's say mid price is $1.20. All right. Now let's say I want to buy the 80 Delta in October. It's going to be a different strike for sure. 80 Delta in October. We're going to have to round because they don't have all the strikes here, but 67.5 versus 70. Okay. Now this one being $1.20, this one being a lot more, right? Let's call it 385. So the difference between the two is $2.65, like 3x what the first one cost. Different expiration dates had different pricing. Yes. Now, I don't have that built into here. And that would be almost impossible to build into here because it does have different pricing. It will always have different pricing, and there's no way to account for that. So whenever I build this based on share size, and then I equalize that because I usually around the 80 delta. So I always divide my share size by 80 to get me number of option contracts. Now, to your point, you could go to the September 9th or September 20th, which is 9 days away, and get 3 times as many as you could in October for the same notional value to your account, right? Let's say if you had $380 you wanted to spend, that would get you 1 option in October or 3 options in September. Totally valid point there. I don't worry about that. Like I say, I focus on position sizing based on shares. I divide that by 80. It's usually the delta that I end up with is the 80 delta. And then whatever the pricing comes out to is what the pricing ends up as. Generally, that hasn't really been an issue for me. Of course, sometimes you'll end up with 10 times as many options as you would on a different stock. But there's not a real way, in my opinion, and I could be wrong, to normalize that betwixt expirations. So I don't worry about that. I just focus on hitting around the 80 delta. As long as everything else falls through, it's not been an issue for me. So I don't know if that is a great answer to your question. But the point is that yes, there is a difference in pricing. And there's not really a way to normalize that out. So I just focus on the share size and then I divide by 80 to get my option size. Max asks the question, why do we rely so much on the SPY? The SPY is the general, right? The SPY is the general. Why would you rely so much on your steering wheel of your car? Because it's going to point you in your direction. Why would you rely so much on the gear shifter of your car? Because it's going to move you forward or backward. Why would you rely so much on the glasses on your face? Because it's going to give you clarity so you can see where you're going. The SPY rules all. Replace that with any other market indice you want to. You could replace it with the Qs. You could replace it with the Dow, DIA. You could replace it with the futures of ES, right? Point is that it's to Randy's point, exactly. It's the 500 largest companies in the United States. And that is the market benchmark. That is the benchmark set by everybody. This is the index that is tracked by everybody. And that is, like I say, it's the general. So that is the reliance on SPY. It doesn't mean that there isn't a better thing to rely on. Sure, I mean, in theory, in fact, a lot of brokers, I don't know, maybe not a lot of brokers, but I know one thing that Tasty Trade would do is they would try to give you a beta weighted delta. Beta weighted meaning there's a bug in here. Good gravy. Beta weighted delta meaning like how is your performance stacked to some sort of index, some sort of baseline. Okay. The SPY is the baseline for 99% of people out there. Some people might say, okay, I want to know my returns relative to Amazon. You could beta weight to Amazon. You could beta weight to Tesla. You could beta weight to anything. But the SPY is the index. The SPY is the benchmark. And so that is why, and you can do whatever you want, Max. I look at everything from a top-down perspective, and the SPY is the top. The SPY tells you where it's going. That tells you where the market is going. If the SPY is going up, the market's going up. That is a fact. But you can't say the same with Amazon, right? Just throw a stock out there, right? You can't say the same with Amazon, okay? Because Amazon isn't the market. You can't say the same with Nike. We looked at Nike yesterday, right? Because Nike's not the market. The market is the SPY. That's why I look at it. Thanks, clear now. Very cool. Wes says it's a great set of rules to stay safe. I know, dude. Cam says that was a great session where we talked about position sizing. Glad to help. Tug says that works. And Wes says, don't you try to stick to around 3 to 4 weeks? Yeah, absolutely. But to your point, those 3 to 4 weeks. So I usually go 21 days to expiration. I will fudge that. I will fudge that if needed. In fact, when I was looking at Etsy yesterday, I'll give you a great example of fudging that I was ready to do. Had we put on Etsy, which would have been a great trade, I was ready to go, not in October, but to September. Here's why. In October, the puts, we got to look on this side for puts now, not on the call side. The puts basically had no liquidity except on the 55s at the 69 delta. And at the time, it wasn't liquid enough for me. I mean, number of contracts was good, but it wasn't the spread. It was the extrinsic value was too high. And I was like, that's not so great. However, if I pull in here and I look at the 80 delta on the September 20th, so 9 days out, the 80 delta was super liquid at over 4,000. This is 15 cents wide. There's hardly any extrinsic value, 5% extrinsic value. I was like, oh yeah, I'll trade that. So it's a guideline, but I will fudge that every now and then if needed, more for liquidity's sake than anything else. So, all right, cool. Covered a lot, didn't we? Thank you all so much for coming. I really appreciate your time. We do this every day to help you out. This is something where we feel here at OVTLYR, and this is one thing Mark mentioned this morning. He said, Chris, we really need to stress the fact that we couldn't do this without you, right? We at OVTLYR could not do this without you, and we are eternally grateful, and we would like to return the favor by trying to make you as much money as possible. So thank you all so much for coming. We will try again to go short tomorrow, but if not, we'll continue to control our risk and wait until something pulls through. Thank you so much for coming, and we'll talk soon.